Today, Sam Bankman-Fried is denied bail in the Bahamas. Binance's CEO assures customers things have stabilized after billions of dollars in withdrawals. And Kraken's Dave Ripley discusses how the exchange plans to weather the crypto industry after the fall of FTX. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies rising again this morning ahead of the Fed rate decision this afternoon. Bitcoin crossed above $18,000 and Ether jumped above $1,300, both by noon Eastern. Meanwhile, Cardano rose to 31 cents. Okay, let's talk about the top stories. First, a judge in the Bahamas just denied bail for Sam Bankman-Fried. Citing heightened flight risk, the judge said SBF should be remanded into Bahamian custody and set a date for his extradition hearing, February 8, 2023. NBC News previously reported that Sam Bankman-Fried's lawyers plan to fight any extradition order, but here in the U.S., federal prosecutors continue to make their case against the former FTX CEO public. Federal authorities allege SBF used tens of millions of dollars in customer funds to donate to Democratic and Republican candidates. At the same time, the CFTC is suing Bankman-Fried, FTX, and Alameda Research for using customer funds for personal expenditures. Then there's the SEC, which is charging SBF with defrauding investors. Next, the Senate Banking Committee just held its own hearing on the collapse of FTX one day after the company's new CEO, John Ray, testified in front of the House Financial Services Committee, claiming that FTX committed old-fashioned embezzlement. The goal of today's hearing, to examine how the crypto exchange's implosion could impact the nascent industry.
FTX and Alameda Research took advantage of the crypto industry's appetite for speculation. They were able to borrow and lend from other platforms and invest in other crypto firms, inflating the crypto ecosystem and growing their own profits. All the while, venture capitalists and other big investors, shame on them, fell for it. They were caught up in the speculative frenzy, missed the red flags, and FTX showered Mr. Bankman-Fried with more and more money, and now it's most likely gone.
The hearing featured 4 witnesses, including FTX shareholder and ex-promoter Kevin O'Leary. He said he believes in blockchain technology and in the future of crypto, but stressed the need for regulation in the U.S. When asked why he thinks FTX failed, O'Leary testified that after his accounts were stripped of all their assets, he called SBF asking, "Where is the money?" O'Leary said he learned that at some point, Binance purchased 20% ownership for seed stock in his firm. O'Leary also said he learned that it cost SBF as much as $3 billion to buy back the shares from Binance.
These two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went.
We reached out to Binance for comment, but as of noon Eastern, we hadn't heard back yet. Finally, Binance's CEO is speaking out to try to calm customers after billions of dollars in withdrawals from the platform. Changpeng Zhao, also known as CZ, tweeted that the situation had stabilized and that the wave of withdrawals wasn't the worst the exchange had ever faced. He also blamed FUD, or fear, uncertainty, and doubt, for the stress test Binance faced. Still, investors were concerned after Binance halted withdrawals of USDC while it conducted a token swap and blamed the delay on New York banks being closed overnight. Binance later resumed withdrawals after about 8 hours. Blockchain analytics firm Nansen also told CNBC Binance faced about $3 billion in withdrawals in the past week, but that only makes up a fraction of $60 billion in assets reported on the exchange. Still, investors continue to be on edge after what happened with FTX. All right, on to our main story, and sticking with the state of crypto exchanges, I spoke to Dave Ripley of Kraken to get his reaction to the implosion of FTX and how the business plans to weather a prolonged downturn. Let's start with the story of the week, the story of, the past few weeks, really. Sam Bankman-Fried indicted on 8 criminal charges yesterday. Your reaction?
The story progresses, doesn't it? So first off, huge travesty for, customers and everyone else impacted by this. Frankly, what we've been calling outright fraud for some time now. So, obviously not a great story for FTX and those customers, but we do think there's a better way out there. Of course, it's a failure of a trusted third party, and crypto and Bitcoin, ironically, are the solution to the removal of trusted third parties. So we're optimistic about that path forward.
Third parties, centralized exchanges, of which Kraken is one, they're really coming under a lot of heat. It's a huge shift in trust and sentiment in the space. Yep. So how is this affecting your business? What's keeping you up at night?
Yeah, so I think there are two things. First off, we do think there is in fact a better way. We're kind of quite outspoken now about our proof of reserves that we executed 2 times this year already, have another one planned for January. We think we did it the right way, where there's a lot of our peers that are jumping on the bandwagon is not the right word, but kind of following in our footsteps to do something similar. I think there's a lot of noise out there on what actually is appropriate proof of reserves. I think we have probably the best recipe that exists out there, and there's many that are kind of subpar. But at the same time, I would say the other thing to note is more funds are actually moving to self-custody now following these events, these failures. We actually think that's a good thing. We're strong proponents of the ability to control your own Bitcoin, your own cryptocurrency, to control your own keys. We've seen more funds move to self-custody generally across the industry, and so that's a good thing. I think in the long term, ideally we see more of that in the industry. It's kind of the true essence of Bitcoin and cryptocurrency.
Billions of dollars in funds leaving the Binance exchange this week. I know you're not here to talk about Binance, but a lot of people eventually found that there was a lot of unclear information, or maybe even a lack of information as part of that so-called audit. So what is your recipe at Kraken? You said that you'd done 2, and I know that you were pushing the importance of proof of reserves audits before this whole FTX thing even blew up. So what is the recipe, and how does the way Kraken does it sort of set you apart from your competitors?
Yeah, so no insider information here on Binance or anything going on over there. We have seen what they released for proof of reserves. We do think it's pretty obvious that it is inferior what they've released thus far. Maybe they'll improve it. We'll see. I think there's three kind of components to the proof of reserves that we think are important. One, looking at both liabilities and assets. That's basic. Without looking at those 2 pieces, you almost have nothing really. You just have a kind of a list of addresses, and so that's not terribly helpful. There's some nuance there, making sure that there are no negative balances included, and in some other kind of minutia I'll try not to drag everyone through right now. The second piece is, of course, involvement of third-party auditor. And then the third is giving actual our clients the ability to go on to their account, see if their balances were included, then go directly to the auditor, the third-party auditor, not even leveraging Kraken directly, and then verify directly with the auditor that their balances were included in the audit. So I think those are kind of like the 3 fundamental pieces. There's certainly a bunch of details underneath that as well that you have to get right. But those are kind of like the 3 base fundamentals that we think are important.
Final thing for me, what is driving the market right now? I know it's the end of the year and we're kind of in a lull and we're still dealing with the aftermath of FTX, but let's take Bitcoin specifically. It's been driven pretty much by the macro narrative for most of this year. So what's driving prices right now, and to what extent do you think it's still driven by the macro?
It's interesting. So a few things. Yes, we did see this increase in correlation with the macro over the past couple of years, which really didn't exist if you dial the clock back, I don't know, 4 or 5 years or so, 4 or 5 years plus. And so I do think, as you noted, macro is actually a key influencer on the crypto prices in the industry generally, as macro is on almost all asset classes. And so I think that is a big driver. Of course, the other significant driver, all these different events happening in the crypto space. Unfortunately, a number of them negative more recently. Or FTX and frankly the other contagion that's out there, I think, has a lot of folks scared. We know about Genesis, we know about BlockFi. There's frankly potentially likely others that are going to experience contagion due to FTX, and so I think that kind of uncertainty is really holding things up, and that's going to need to kind of come into the light. Have to work through those things and hopefully get to a better place after we do.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.